Have you ever looked at the market and wondered why certain highs and lows seem untouchable? What if I told you these levels aren't just random, they're carefully engineered by the market to reveal its next big move? Today, we're breaking down high resistance liquidity, or HRLR. These critical levels hold the power to predict market reversals, continuations, and even where price is likely to go next. If you've been struggling to understand why the market reacts at certain highs and lows the way it does, this video is for you. Don't forget to hit like, subscribe, and drop your questions in the comments. As always, I'm here to help you guys the best I can. Let's get straight into it. Before we know the role of high resistance liquidity, we need to know the definition. A high resistance high is a high that has swept a previous high but rejected strongly. Similarly, a high resistance low is a low that sweeps a prior low but rejects higher. We will show this obviously on the charts, but the characteristics are price reacts decisively and often leaves wicks or strong candles, and these areas often indicate protected highs and lows when aligned with higher time frame order flow. A high time frame SMT divergence adds confluence to high resistance highs or lows, and we fade low time frame SMTs when the high time frame suggests a strong move towards a liquidity level. First, I will point out a couple high resistance lows and a couple high resistance highs, but to understand why they will hold and to have a good understanding of your narrative behind the highs or lows, we need to understand everything behind them. So I will point them out, but please stick along with me so you fully understand the concept. On the chart now, with the boxes, I have the highs and lows that were in the moment, high resistance liquidity, and then with the lines, I have what high or low they ran. So you can see here to our left, we ran this high very aggressively and reverted back inside the range, leaving at the moment a high resistance high. We see that leads us to chase these lows, to draw into them very quickly, break lower quickly after accumulating, then we manipulate lower past the lows and put in a high resistance low that draws us into the high here and puts in another high resistance high. Like I talk about, it's easy to point them out and show them, but if you don't have the understanding of why we reversed below this low or why we reversed above this high, it can get very confusing, and especially when you get down to a lower time frame, damn near impossible to completely understand where reversals should form and where we should continue from. I can't teach in every video what high or what low is a key high or low, but what I can do is tell you to always watch for sharp reactions above these key highs or lows, as they often signal liquidity sweeps and the market's intent to in reverse or accelerate. As we can see here, below our key low into a PD array and above our key high into a PD array. We pay close attention to rejections and failure to close above or below key highs or lows, as they often indicate potential reversals or strong liquidity holds. We're going to hop in and take a look at trades I took this week, ones that I sent inside of the Discord, link in the description, and we're going to understand and take a deeper look into why I took them and where I saw our protected high and low inside of the trade. Coming in from last week, we had a big thick down closure candle into our order block here. As we can see, this order block hasn't quite been mitigated. It hasn't really been used as a down closure candle to send price higher. We've seen no candles come in. We've seen our two reaccumulation candles and almost what seems to be a manipulation downwards into our PD array. Before we talk about a couple trades, be sure to like the video because this is absolute sauce. I wish I had this stuff when I first started because this is all you will ever need. You can go through ICT concepts or SMC, whatever you want to call it, day by day, and the information I'm putting is almost a fabrication of everything that he wishes he could teach, but he almost throws so much. Like, what is the Mongoose PD array? What is that? What is the Reaper? You know, these are things you don't need. So everything I'm putting in here is streamlined and stuff that is 100% used day to day. You can use it high time frame to low time frame to be able to mimic price and mimic it high time frame to low time frame and find almost perfect trade validations for every day, for every session that you trade. And that is what is important in having narrative, confidence, and confirmation. I'm not just going to sit here and yap. You guys can see the notes that are put in. I always have an MMXM framework. I always use the power of 3. even if it is a session power of 3, or if it's just a obvious time based or just a obvious candle power of 3 with an accumulation, manipulation, followed by distribution. The true draw on liquidity is often distinguished and found by using the high time frame. You will be able to find your manipulation phases on the high time frame a lot easier and be able to follow that on the low time frame and have a lot more success within your trades. LR zones are often used as magnets with your high resistance low or your high resistance high, putting in the final protected high or low before the low resistance liquidity run. To best use these concepts with the most high probability, they require a time-based validation to confirm. Time-based levels have everything to do with inside of engineering manipulation. To best use these times, we understand that 6 a.m. creates levels or low resistance for expansion phases such as 9 to 12. This goes into your sessions, into your days, into your weekly profiles. So we can think as a basic concept that the Asian session builds liquidity for the London session. Then the London session either responds from liquidity from a previous day, previous week, and then continues in the New York session. You have to understand what high time frame level you're delivering from, when, where, and why to have the best results. To understand where price is going, you have to understand the draw on liquidity, and price seeks liquidity at inefficiencies or imbalances before targeting specific highs or lows. Failed high time frame PD arrays combined with opposing high time frame PD arrays create high resistance liquidity zones. Hopping in, we can see with that Friday low we put in and then Monday's low, which I always end up never trading Monday because I use it as a range day for Tuesday into Wednesday into Thursday. So we can see Monday obviously closed within and didn't break Friday's low. We have liquidity below Monday and Tuesday's low, so we mark that out as a key low. Lots of liquidity below previous week's low, previous day low with Monday, and we can see it's 2 failure swings. We also saw on the higher time frame how we had an unmitigated order block, as we can also see we delivered from the turtle soup low, that delivered from a turtle soup low, that delivered from a turtle soup low, that delivered from a turtle soup low, right? Souping this internal to the order block, with this sweeping a low out to the left, and so on and so forth. So we have a narrative for continuing higher, creating our stairs, our balanced price ranges with internal to external, with an OTE jab, and our rejection and failure to closes. So nothing other to do than to follow our bullish bias and be able to position ourselves in a discounted price leg. As we know, from this low to this high, we can see our OTE fib, also where we're rejecting inside of an OTE. So we don't need to come and touch all the way down inside of this down close candle here. We can see we can use this one to support price higher as we jabbed into a discount, as well as right this candle being right above a discount. So it makes sense to go ahead and come into there, and we see in Friday we wouldn't be really looking for a reversal. So we come into the new week, see Monday, Tuesday, and we're able to look for a narrative to be able to long and look for price to come inside of this imbalance into the candle's high. From daily to 4 hour, we can see inside of that low, it's also at what time? 6 a.m. inside the the 4 hour 6 a.m. candle. We jabbed, took the low, and easily rejected. So we can see we stab into the order block, but I like using the rejection block here. We can also see inside of the wick how we almost tapped EQ, would have been perfect there. But as we always know, inside of our higher time frame wick, what lies? A lower time frame order block. So we look at the hourly time frame here and see our big thick down closure candle into our PD array with our next candle liquidating that low and the other low, closing back with inside the range, and our next candle closing above. Just like the daily time frame, we accumulated above the high with our thick down closure candle into our thick down closure candle here with the order block, right? We have low resistance, and also, what do we see? Right, this high is still in a premium, so it's okay for us to jab a little bit lower. We see into an OTE and reject from that area. So where did I end up taking a trade fully? We ended up longing one time here, but what I want to focus on is the most high probability of trades, with the continuation trade. I ended up longing all the way out here because I was able to position myself after a turtle soup, seeing the market maker model here, right? Then a jab lower, another consolidation into our turtle soup, and then continuing to deliver higher. If we look on the 15-minute, we can see the same type of price action with an Asian accumulation. London sweeping out the Asian low with a thick down closure candle and a revert back in the range using that order block here, right? And just because it's jumbled up and weird looking, right, you can still see this whole area as an order block, us stabbing into it after reaccumulating above our old high. Not reaccumulating above this high, yes, I understand that, but we're inducing more trendline liquidity into the highs. Easy low resistance, followed by more inducement into the highs here. You can't be faded just because we've got 1-2 taps into it, right? We're not double top traders. We're not double bottom traders. We understand why this low should hold from this low holding and continuing. So then from there, we see our OTE retrace. I wasn't inside of this price action because it's not at a very, optimal time for me to trade. Yeah, 10:30, 11. I just, didn't end up trying a trade inside of there. We see though, after we break the high with our breaker, induce more liquidity with equal highs, we see we run a previous low, form that same type of rejection block like we saw on the higher time frame, and we zoom even lower. And what do we see? A rejection block after sweeping equal lows, market maker model. And honestly, we can just use this whole leg, but right, we do sweep the low there. So, what's important is the high resistance low that we've put in, and that's what every turtle soup low is a high resistance low when it makes sense with the narrative, the draw on liquidity, a market maker model, an accumulation, manipulation, distribution, followed by everything else in this video. I don't, there's a lot there. I don't want to just keep naming everything out, but if you followed along, took notes, you can even see that we have equal highs here, right? We broke them, reaccumulated. We could have used this fair value gap, internal to external. And that's one thing I definitely forgot to add into this video is your value of internal to external, right? Your internal turtle soup into your external, right? And understanding that we've reaccumulated above our old high, used that breaker order block, and used the internal fair value gap to shoot us higher, not needing to retrace lower and being able to leave the fair value gap open. I was able to find my entry inside of here, inside of the rejection block. So we can see that same framework playing out from the protected low order block, right? And then being able to hold to this high where that's really all I needed was the low hanging fruit with the equal highs. And, we followed through. You can just see it's right into 410, 420, 430, right at the end of the day. So no real need for me to hold through there when I was aiming for here and just wasn't looking for it to chop back down and maybe take this liquidity into the, next open. We can see a very low RR trade for me here, but what was the importance was the probability of it hitting. We see our our new 4-hour candle open in the PM session, manipulation lower, so our open low, followed by a high close. We put in a protected low that sweeps out a low and reverts back in the range very aggressively. Like we said, it's not going to be every low that takes out a low and moves higher, but you have to understand the narrative, the when, why, and where. Followed through with confidence that we're not going to break lower here. We do that, or we do the opposite of that in reverse inside of the rejection block, inside of the order block, above the protected low. And we see, if I would have held, obviously, would have been a little 3R play, nothing crazy. But all we needed was the equal highs, and you can hit these with high probability, high precision, high win rate, and high RR. With everything that we include in the video, that's all you need. Hope you guys enjoyed, and I'll see you in the next one with low resistance liquidity.